Welcome. Now, we've been talking or going over what the best time frame to trade is, which is the daily time frame. And we're going to continue to go over that in this video. Now, we've previously had two examples where we took advantage of the short-term moves, aka the counter trends that the market is making. As you can see, these are the two trades. This is NZD CHF. We're just taking advantage of the small moves that the market is making, only using the daily time frame. So we had a nice impulse here, come back for a correction. We just want to see another impulse to the upside, creating a higher high. Took advantage of that. We can go to the 1 hour, look at it. Nice and easy 3R, take profit on that. And then what we're going to talk about and continue to talk about today is CHF JPY. From the hour time frame, a little 2R risk to reward. If we do look at it from the daily time frame perspective, you can see we had a nice and easy break of structure coming down. We wanted to see the market come back and retest previous structure support, now turned resistance, and that's on the daily time frame. So purely using the daily time frame, we found these two setups for a nice 2R and a nice 3R take profit. If we do go on to the example of today, you can see we're just following the flow of the market. So the market is moving down, making lower lows, lower highs, lower lows, lower highs. We want to see a lower low created, lower high, lower low, lower high, lower low, all the way down. Now, we're just following the flow of the market. If you do go back to the previous video, or one of the previous videos, the best time frame to trade part 1, you can see how we took advantage of this move right here on CHF JPY. And if you look, trade that we're going to talk about today is not too far in between the trade that we took over here and this new trade to come. And that is what we do here at the FX Savant University. We trade all pairs all the time, and we're able to get in with the big banks on the short-term moves in the market that they're making, as well as the long-term moves in the market that we're going to cover today. Now, if we get into it, speak about it one more time. We just took this day trade on this pair for about 49 pips, 48.8 pips, take profit for 2R. And where did this market go to? Exactly where we expected it to go to. If we go back, what did we want to see? Matter of fact, let me do this. I don't know why it's not showing up. Oh, okay. So if we go back, what did we want to see? We wanted to see this previous structure support right here, now broken to the downside, be used as resistance and be a magnet to where the price wants to go in order for us to find a nice day trade. What happened? We got a nice retest of our entry. Price exploded to the upside, coming to this area right in here. Then if we look at what happens next, we play it one more candle through. So this has already taken profit. We've already taken profit on this. We're chilling. 2R up. We're waiting for the next opportunity. We go back to the daily time frame. What can we see? We came into this area nice, exactly as we wanted to see. And then what happens the next day? We get a pretty significant bearish candle. After this candle was printed and closed, what can we extract from the information that we are given? Off the bat, we're in a downtrend. We aren't breaking any highs on the daily time frame. Now remember, this is all about the daily time frame and how we can find opportunities just using the daily time frame. We created this move to the downside on the daily. We came up, created a lower high, came back down, created a lower low. And now that this bearish candle has printed, we've created lower high again, which is in trend with the structure of the market and the way that we want to trade. So now that this bearish candle has been printed, we're starting to see the trend form. We're getting lower highs, and as well, if we look into this candle, we can see that we're starting to get some volatility and velocity in this market with this candle. So this one candle is bigger than this previous bullish candle, as well as this candle is more full, and we're starting to cover more ground. So it looks like the big banks are starting to enter into this market, which is further confirming the bias that the market wants to move to the downside. And that's just purely on the daily time frame. Now that we've gathered that information, what can we do? We can go back and use all the information that we've researched in all of our time trading, all the back testing, all the videos we've watched, all the articles we've read. We can start to compile all the information that we've gathered and put it to use now. So what is one thing that we have researched, I've researched and seen it to be true over and over and over in the market, is that when we get a lower high created in the market, we expect there to be a lower low created, and that's on the daily time frame. I just expect there to be a lower low created on the daily time frame simply from the analysis that we've done so far. Okay, so what do we do next? Well, with the information that we've gathered, we now have the start or the making of a plan on how we're going to attack the markets the next day, so the following day. So now that we've seen all of this and this day is closed, going into the next day, we know what we're looking for. We expect there to be continuation to the downside for a lower low. So we're only looking for sales. That's it. Buys are not in our plan, so we don't take any trades that the market starts to make moves to the upside. We don't take those trades. We don't look to participate in those trades because we haven't put that in our plan. We did not identify that the day before. We weren't ready for it. So simply put, we either wait until we can find a nice buy opportunity in the market to capitalize with the strategies that we use, or simply because we know that the market wants to make its move to the downside, we wait. So even if we start to get a break above this structure area coming up, we don't trade, we wait for the manipulation price to come up, take out some of these sellers early, then we'll start to look for some sort of entry if we do get our structure presented, if the market ever does. We don't hop into the trade hoping something's going to happen. We wait and we analyze the market and do what the market is telling us at that present moment. It's either we look for the sales or we don't trade. And on top of that, we want to make sure that we're in with the sales as well, because we know the market wants to move to the downside. We've already gone over it and broken several levels of structure. The majority of the money is going to be made on its way to the downside. That's where the big players and big banks and institutions are moving their money. They're looking to sell. So the majority of the money is going to be made on the downside. So the overall direction is down. That's where the majority of the money wants to go. So we're going to look for sales going into the next day. Now, we're still on the daily. This is classified as a swing trade because we're holding our positions for more than 24 hours or one day. Because we expect there to be a lower low, I can go ahead and anticipate that for the next few days, I'll be in this trade. From experience, I'm prepared for the market to come in this level of support, give me some sort of entry, come into this level of support, get rejected a little bit, finally break this level of support. If not, go ahead and tap my take profit with a wick still closing below, or come back for a retest and then finally break below, hit my take profit, hitting my take profit, making its moves to the downside. I expect there to be lower lows and lower highs created on this market on its way to the downside to create a lower low. I'm willing and ready, anticipating, I'm prepared for this market to take 1, 2, maybe even 3 days to go ahead and hit my take profit. I'm not worried. So this is a swing trade. Now that we've gotten all that covered, we can now start to look for our entries. But first, we're going to drop down to the 4-hour time frame. And on the 4-hour time frame, what can we identify? On the 4-hour time frame, we can see we're starting to create some bearish structure as well, which is nice. Perfect. Exactly what we want to see. We want to see the market creating lower lows and lower highs, because if the market wants to move to the downside, it should continue to create lower lows and lower highs. So now that we've come to this spot in the market, I see that we've found a level right in here. Even if we extend it all the way out, we can see that it's been structured resistance, support, broken to the upside, used as support right in this area. Support, resistance, support, coming into it, support, support, support. So I know that this is a pretty strong or pretty major significant structure level. So I'll wait for the break below before I enter. If we do play it forward, boom, we get the break and close below this structure area exactly as I wanted to see. So now that we've gotten this break below this structure support area, let's go down to the 1 hour. On the 1 hour, we can go ahead and get into it. We'll just do it right now. So this is NZD-CHF, exactly where we left off. The buy limit in the previous video, we go down through it. USD-C and H, I think we ended up closing this for a 2R take profit. Yep. So we ended up getting around a 2R take profit. That's CHF-JPY, my bad. CHF-JPY, number 1 hit take profit. USD-CNH. There's Euro-USD, 107 pips. That's video 2. Check that one out. Okay, USD, ZEC Corona. End up coming back down. We closed for a 2.25 take profit on that. Just going through it. As you can see, same thing. We flow with the market, came back down for a take profit of a swing trade. Now we're looking for a short-term day trade on Euro-USD. I think this one ended up coming back, stopping us out, break even. NZD-CHF, looking for a re-entry. Euro-USD stops at break even. I think it came back down. Okay, CHF-JPY, 120.25, 125.4. So now that we've dropped down to the hour time frame, see that we're just going straight through them. This is how we roll. That's how we go and take profits, hit left and right. But back to it. Oh yeah, so now that we're back on the 1 hour, now that we've dropped down to the 1 hour time frame, what are we looking for? The same thing that we've been looking for over and over and over. What I'm stressing to you all in these videos. Previous structure structure support broken to the downside, if retested, should act as resistance, and it should also be a magnet to the market to be attracted to that area. So if we go back just on the daily time frame, I'm all about examples here. What do we have? Previous structure support broken to the downside. We're just waiting for it to be retested. Boom. We go to the 4-hour time frame and we look at this current trade. What do we have? Previous structure broken to the downside. Now looking for it to be acting as resistance. Down to the 1 hour. What do we have? Previous structure broken to the downside. Now looking for it to be acting as resistance. Same thing over and over and over. Staying consistent in the way that we trade is the way that we find profitability. The way that anybody finds profitability, to be honest. So now that we've gotten that, I do want to say this one quote. I want you to remember this. You gain nothing in trading from being first. You gain everything from being correct. So with that said, yes, we could have entered over here on the highs. We're expecting the market to come into this area and get rejected from the highs to see the move to the downside. We would have had a huge risk to reward, bigger risk to reward than a 3R, but it didn't follow the plan. The price was making moves to the upside and currently trending up. So the market was creating higher highs and higher lows, higher highs, higher lows. It's looking to create a higher high. Why would you go ahead and sell in this area before you started to see structure break down and started to see your bias confirmations? So yes, we could have been in first early, got in right here, but you don't gain anything. You may gain risk to reward, but the probabilities and win rate are going to drop. So you're not gaining anything. You're actually trading some of the better things in your trading that's going to help you be successful for greed, monetary value type things, short-term thinking, beginner trader type thinking. So you're trading the really, really good aspects of your trading for bad habits and bad things that don't provide consistent profitability, if that makes sense. So you want to be correct. You don't want to be first. So now that we've gotten all that taken care of, clean this up a little bit. Now that we've gotten all that taken care of, let's talk about our stops, entries, and targets. You don't really want to go much lower than the 1 hour time frame when you're swing trading, because having an exact entry isn't as important as the areas where you enter and the areas where your stop loss and your take profit are. So I mean, it doesn't matter if you're pinpointing your entry when you're swing trading. It's more important to make sure that your stop is protected, that your take profit is confirming your higher time frame analysis, and then your entry gives you a profitable or a above 3 risk to reward. So you want to have at least a 3R when you are swing trading, 3R or more. And that's simply put because it'll give you the opportunity to have a 30% win rate and still be profitable. You can only win, or you can win only 3 trades out of 10 and still be profitable with a 3R risk to reward. So that is why we do that. It's going to be very difficult for you to consistently snipe 100 pip moves using these smaller time frames. It's going to be harder for you to get a good risk to reward using really, really small time frames trying to get tight stops, because you won't do what you need to do, what is necessary to do, and that is to have your stop protected. Now, if we look here on the 1 hour time frame, we can see where we're pinpointing our entry, previous structure support, now want to be retested and act as resistance. And if we look at our stop loss, we have our stop loss protected. How is it protected, you may ask? Well, we have multiple levels of structure. So we also have where we don't want to see the market really go past, like we want to see the market get rejected right in here, which would be ideal. So we have one level of structure right there. Then we also have this level of resistance that if tested should act as resistance once again. So the markets came into this level before, gotten rejected. Once it broke below it, got rejected, broke below it, got rejected. So we also have another level of structure. And then we can add third level of structure in this area right in here, because this was an area that did stop the market. Once we broke above it, we came back, found some support. Then when we did finally break below and come back, retested, it did act as some structure, broke above it, came back, used it as some structure here. So we have this level of structure in the market as well. And then we also have this level right up in here, these highs right around in here. That is the most previous structure resistance, second to most previous structure resistance right in this area. That if all these levels get broken to the upside, then I probably don't want to be in this trade anyway, because we're creating structure to the upside. And what did we speak about before? That we want to wait and make sure that the structure is on our side, because I don't want to be in the trade all throughout this hoping the market's going to turn around. I'd rather be out right in here, let the market do its thing, manipulate, take out the sellers, and then start to create some moves to the downside. And I'll look for a re-entry if that is the case. All the rules of the strategy are satisfied, I'll just re-enter into the market. So we want to make sure we have our stop protected, and then as well, we have our target down here amongst these lows where we want to see a lower low created. To make it really, really simple, I didn't mean to show that, but to make it really, really simple, it's a nice and easy minus 272 of the Fibonacci right around in here. So something that we do use in the program. I'll give it to you for free, plug. You can have that. Now, we've gone through all this analysis. We figured out everything. We've taken the time to let the market play out, to see what it's going to do, to find ourselves a good position to enter into the market, a good place to put our stops, and a good place to put our targets. The work is done, baby. That is essentially the work with the air quotes, of trading. That is the work of the job. Now that you've done the work, all the preparation and analysis and everything you go in to do beforehand, before you take the trade, that's your work. That's actually working. Now, depending on the work and the effort you put in, it's time to sit back and get paid. So either from the work and the effort that I put in, I'm going to make 3 times my effort, or I won't. I'll lose one. I can still be correct with my efforts and the work that I put in and lose, because essentially I just need to make sure I do my job. And what is your job as a trader? Your job is to come up with a plan that makes sense. If we look at this here, does it make sense? Yes. We're creating lower lows and lower highs on the daily time frame. We've recently created a lower low, the double top on the hour time frame. We're looking to break structure. We're breaking a major support level right in this area where we just broke this level. We're looking for a retracement where the market should act as resistance. Once again, we have our stop amongst the highs, protected with several levels of structure, and we have our take profit down here amongst the lows, looking for a favorable risk to reward and over 3 or more risk to reward. So our work makes sense. And yes, you can still lose and have everything make sense, but that is your job as a trader, is to come up with a plan that makes sense and execute your plan. As long as you do that, you're doing your job correctly. And then on the other side of the coin, you could do all of that wrong or lazily or not do it correctly, be missing one piece, and you'll still lose just one entry. So you're just going to lose one. We're risking 1 R to make 3 times. So whether we're wrong or we're right, we're only risking 1 to make 3. And then other than that, only thing left to do is to place your order and let the market play out. Speed it up a little bit. We start to get some retracement, a little bit of drawdown. And as you can see, the levels in the market that we drew out, that we had our stop protected, actually played a factor when it came down to it. Not necessarily our entry, but if we look at it, we can see the market came back, tested this area, used it to create a higher high, and then came around where we had our final level of structure and didn't want to see the market break above, and the market came in there and got rejected and has now started making its way to the downside. So it's pretty nice. We're risk free. We've retested these lows where most people would usually take profit. We're looking for a lower low, not an equal low to be created, a lower low, because that's the trend of the market. Yes, we came in close to the take profit, but stops are at break even, not really worried on this trade, and then price goes on to hit the take profit. Nice and easy, nice and simple. Like I always say, trading is not supposed to be difficult. It's simple, but not easy. You're supposed to make it easy for yourself by doing the same things over and over and over. You know, are truths in the market, consistent. You want to stay consistent in the way that you move about the market and the things that you learn, so that way you can trade the market consistently and find consistent results. But that's really it, man. The daily time frame is the best time frame to use for your trading, whether you're a beginner, intermediate, advanced, whatever. The daily time frame will provide you with everything that you need to either build a strategy or trade from. A lot of people can trade from the daily time frame as well. I remember what I wanted to say before we get up out of here. This is a trade that we are currently in, using the same things. Same things, man. We look at it on the daily time frame. What do we have here? Previous structure, resistance, and support. Previous structure, support right here, broken to the downside. I just want to see it be retested once again on the daily time frame. So same thing over and over and over, man, and over and over and over. Once we get this retest back up in here, then what do we have? Rules of the strategy, the way the market flows. After we have this impulse, we need a correction, some sort of retracement, exhaustion, and then we're just looking for the next impulse. So after I get this take profit met, what will I be looking for? The swing trade to the downside. That's what we do over here. The rules of the strategy at the SAVANT University. We trade all pairs all the time. So yeah, I just wanted to quickly go over that before I get up out of here. But yeah, man, I hope you have a profitable day on and off the charts.